The financial world stands on the edge of what could become one of the most consequential public offerings in modern history. SpaceX, the aerospace manufacturer and space transportation company founded by Elon Musk, has reportedly begun serious internal discussions about taking portions of its business public. This development marks a significant shift from Musk's long-standing position against traditional public markets, and the implications reach far beyond typical corporate finance decisions. For years, Elon Musk has been vocal about his preference for keeping SpaceX private. His reasoning centered on the quarterly earnings pressure that publicly traded companies face, arguing that the long-term vision required for Mars colonization and revolutionary space technology simply doesn't align with the short-term thinking that often dominates public markets. Yet sources familiar with the matter suggest that conversations within SpaceX's executive leadership have evolved considerably in recent months. The strategic approach reportedly under consideration involves a selective public offering rather than taking the entire company public at once. This method would allow SpaceX to access public capital markets while maintaining the operational independence that has defined its success. The most frequently discussed scenario involves separating Starlink, the satellite internet constellation business, into a distinct publicly traded entity while keeping the core rocket manufacturing and Mars mission components under private control. Starlink represents an increasingly valuable asset within the SpaceX portfolio. The service now operates thousands of satellites in low Earth orbit, providing internet connectivity to remote and underserved areas across the globe. Revenue projections for Starlink have grown substantially, with some analysts estimating the division could generate tens of billions in annual revenue once fully deployed. This consistent revenue stream contrasts sharply with the more sporadic income associated with rocket launches and government contracts. The business case for separating Starlink makes considerable sense from multiple angles. Satellite internet service operates as a subscription-based model with predictable recurring revenue, exactly the type of business that public markets tend to value highly. Telecommunications and internet infrastructure companies typically command strong valuations, and Starlink's technological advantages over both terrestrial competitors and other satellite providers could justify premium pricing from investors. Financial pressures have undoubtedly influenced this strategic reconsideration. SpaceX has raised capital through multiple private funding rounds, with valuations climbing into the stratosphere. The company's most recent valuation exceeded $150 billion, making it one of the most valuable private companies in the world. Yet the ambitious projects on SpaceX's roadmap require enormous ongoing investment. Starship development alone demands billions in testing, iteration, and infrastructure build-out. The Starship program represents humanity's most ambitious spacecraft project, designed to be fully reusable and capable of carrying both crew and cargo to the Moon, Mars, and beyond. Development costs have mounted as SpaceX pushes the boundaries of what's technically possible. Multiple test flights, each costing tens of millions of dollars, have provided crucial data while consuming substantial resources. The Boca Chica facility in Texas has grown into a sprawling production and testing complex requiring continuous capital infusion. Beyond Starship, SpaceX maintains numerous other capital-intensive initiatives. The continued expansion of the Starlink constellation requires regular launches of new satellite batches. Each Falcon 9 launch dedicated to Starlink deployment represents both a cost and an opportunity cost, as that launch capacity might otherwise serve paying customers. The company also invests heavily in ground infrastructure, user terminal development, and the technology needed to increase satellite capacity and reduce costs. NASA contracts provide significant revenue, but they come with fixed pricing and strict milestone requirements. The Artemis program has selected Starship as the lunar lander for returning astronauts to the Moon, bringing both prestige and substantial payments. However, these government contracts often involve cost-sharing arrangements and performance incentives that tie payment to successful execution. Private capital provides more flexibility in how funds can be deployed across various programs. The potential IPO structure being discussed would allow SpaceX to have it both ways. By taking Starlink public while keeping core aerospace operations private, the company could access billions in public market capital without subjecting its Mars architecture to quarterly scrutiny. This hybrid approach has precedent in other industries, where companies have spun off particular divisions while maintaining control of others. Investor appetite for a Starlink offering would likely prove substantial. The space economy has captured increasing attention from both institutional and retail investors. Companies operating in satellite communications, space manufacturing, and launch services have all attracted significant investment. A rare opportunity to invest in a profitable, high-growth space business with demonstrated technology leadership would almost certainly generate intense demand. Retail investors particularly have shown enthusiasm for space-related investments. The success of SpaceX in landing and reusing rockets, combined with the visible progress of Starlink's constellation, has created a strong brand recognition that extends well beyond typical aerospace circles. This public awareness could translate into strong retail participation in any public offering, potentially driving valuation premiums. Institutional investors would bring different considerations to their analysis. Large fund managers would scrutinize Starlink's unit economics, examining customer acquisition costs, churn rates, and lifetime value projections. They would want clear visibility into the competitive landscape, particularly regarding threats from Amazon's Project Kuiper and other emerging satellite constellations. They would also assess regulatory risks, spectrum allocation issues, and the capital requirements for maintaining and upgrading the constellation over time. The regulatory environment surrounding a potential SpaceX IPO involves considerable complexity. The company operates under significant government oversight given its launch operations, national security contracts, and use of controlled technology. Any public offering would require extensive disclosure about government relationships, export control compliance, and the regulatory frameworks governing its various business lines. The Securities and Exchange Commission would demand unprecedented transparency from a company that has operated with considerable privacy as a closely held entity. International considerations add another layer of complexity. Starlink operates across dozens of countries, each with its own telecommunications regulations and foreign ownership restrictions. Some nations have expressed concerns about satellite internet systems operated by foreign entities, raising questions about data sovereignty and security. China has been particularly cautious about authorizing foreign satellite internet services. These geopolitical factors could affect Starlink's growth trajectory and consequently its valuation in public markets. The timing of any potential IPO would depend on numerous market conditions. The broader IPO market has experienced significant volatility, with windows of opportunity opening and closing based on economic conditions, interest rates, and investor sentiment. SpaceX would likely seek favorable market conditions that would support a strong valuation and successful debut. The company would also want to demonstrate several quarters of strong operational and financial performance for Starlink specifically before approaching public markets. Preparation for a public offering typically requires 12 to 18 months of intensive work. SpaceX would need to build out enhanced financial reporting systems, strengthen internal controls to meet public company standards, and prepare extensive disclosure documents. The company would assemble an all-star team of investment banks to underwrite the offering, including likely major players like Morgan Stanley, Goldman Sachs, and Bank of America. Legal teams would work through the complex regulatory filings required by the SEC. The valuation analysis for a Starlink IPO would prove fascinating. Analysts would likely use multiple methodologies, comparing Starlink to both traditional telecommunications companies and high-growth technology businesses. Some might value it based on revenue multiples similar to other satellite operators, while others might apply the metrics used for software as a service companies given the subscription model. The unique aspects of Starlink's business model would make direct comparisons challenging, potentially leading to a wide range of valuation estimates. Competitive positioning would factor heavily into valuation discussions. Starlink currently holds a significant first-mover advantage in the low Earth orbit internet constellation space. The company has launched more satellites than all competitors combined and has established service in numerous markets worldwide. This head start matters enormously in a business where network effects and economies of scale play crucial roles. However, deep-pocketed competitors like Amazon will eventually launch their own constellations, potentially intensifying competition. The technology advantages that Starlink possesses would receive careful examination from potential investors. SpaceX's vertical integration gives it control over launch costs, a critical factor in constellation economics. The company launches its own satellites on its own rockets at internal cost rather than market rates, providing substantial savings compared to competitors who must purchase launch services. Additionally, SpaceX's rapid iteration capability allows faster deployment of improved satellite generations, keeping the constellation technologically current. User terminal costs represent another key consideration in Starlink's economics. The ground equipment that customers install to access the service has evolved through several generations, with costs reportedly declining substantially from early versions. Achieving positive unit economics requires either charging enough to cover terminal subsidies or bringing hardware costs down sufficiently. Public investors would demand transparency on these metrics and clear visibility into the path towards sustainable profitability at scale. Elon Musk's role in any public offering would be scrutinized intensely. His track record with Tesla has demonstrated his ability to lead a public company through extraordinary growth, though not without considerable controversy along the way. His communication style, particularly on social media, has occasionally created complications for Tesla shareholders. Investors would want clarity on Musk's ongoing involvement with a public Starlink entity and the governance structures that would protect shareholder interests. The decision to pursue an IPO would represent more than just a financial transaction for SpaceX. It would mark a maturation of the space industry itself, demonstrating that space-based businesses can generate returns that justify public market valuations. Success in taking Starlink public could unlock additional capital formation across the broader space economy, benefiting other companies pursuing ambitious projects.